the $1 Million Mortgage Experience podcast. All right, welcome to this episode, and we are here today with our guest, Michael McAllister. He is the president of Empower LO. They are a kick-ass mortgage marketing company, and you're going to want to hear what he has to say. I'm excited because, welcome to the show, by the way.
Thank you. Thanks for having me.
Yeah, so I'm excited about this because in this market, it's just, a lot of people are complaining like there's no loans, there's not, there's not a lot going on, my pipe's way down, and I'm excited to share with our listeners and our viewers some ideas about how to get business. So thanks for coming.
Yeah, my pleasure. Thanks for having me.
Absolutely. So tell us about Empower LO.
Yeah. Empower LO, we are a small team based out of Boise, Idaho, that started out when I, as a loan officer, I was 21 years old and wasn't very good at I listened to your Todd Duncan episode, and it spoke to my soul because I was not good at looking at the business as relationships versus transactions. I was young, dumb, and don't know that I had the people skills to build the relationships that I would have needed to anyways. And so the position that I was in, I just needed to find a different way to build my business. And through a chain of like self-reflection and question asking, was able to identify, okay, Quicken Loans, right? Quicken Loans doesn't, realtors hate using Quicken Loans. Nobody at the time,
right.
I don't know if I can say that or not, but
yeah, say it.
At the time,
I don't care.
At the time, nobody, at the time I knew in my market, nobody, like no agent that I knew would accept an offer with a pre-qual attached to it from Quicken Loans, or at least that's what they said outwardly, that they wouldn't. And yet Quicken Loans in 2017, I believe it was, overtook Wells Fargo as the number one volume lender in the country.
Yeah, they're big.
And of course, UWM took that crown the past couple of quarters, but it was rocket for that period of time. And so anyways, that led me to think, okay, how can they do this, right? If realtors really don't want to use them and yet they're the number one volume lender, there's got to be something to it. And short story, really long, that sent me down a wormhole that showed me how to generate, or allowed me to teach myself, I should say, through reverse engineering their funnels and seeing, okay, they're running a bunch of ads here, and this is what their landing pages look like. And I ended up building my own version, like a shrunk down version of their system for my own mortgage business, and used that in a period of a year and a half to just completely transform my business to the point where I had peers in the industry that were reaching out saying, hey, how can you do this for me? And one thing led to another. And here we are like 5 years later, and we've ventured into a lot more than just generating leads with that Google ad campaign, but that's how it all started. And here we are. Cool.
Yeah. And you live in Boise.
Yeah.
So, I guess the common thought is that like internet leads suck, right? Because we talked, the Todd Duncan episode was all about relationship referrals. How do you do that? How do you build those was the cash wheel or the cash flow, circle of cash flow? That's what it was. But I feel like you have some kind of way to make it feel a little less dry or like impersonal. Like tell us how that works.
Yeah. First off, you're right. Internet leads do suck, right?
Yeah.
Like by any measure,
and you have to pay for them, and they don't answer the phone, and
exactly.
And they've been given to like 10 other people, and you got to get them first. And
exactly. By any like traditional measure of success, when you're looking at a spreadsheet, like and you just line up like conversion rate and conversation rate and application rate, like internet leads suck, right. But the internet's not going anywhere, and people are searching online, and people are finding competitors like Quicken Loans or Veterans United,
right?
Instead of talking to qualified loan officers in their local markets. And so, it's not a super fun way to run your business. And yes, we do everything that we can to soften the blow of that, and automate where it makes sense to automate, but also try and keep a personal touch, knowing that that's a differentiator for these guys. But at the end of the day, I think most of our clients that end up really taking off with internet leads are coming from a place of wanting to look at their mortgage business as a business owner and not necessarily as a lifetime relationship driven salesperson. Mm-hmm. And I think that's the key differentiator for like some of our top producing clients versus top producing LOs in the marketplace that built their business traditionally, is that they don't see themselves as a loan officer. Like they wouldn't talk about themselves like they're a loan officer and introduce themselves as a loan officer. They see themselves as being someone who runs a mortgage operation, basically, right? And so, I think that can help make them fall a little bit into the trap of thinking too much about transactions and not relationships. But it's a starting point for people that want to build, want a platform to build their business on, for sure.
That's cool. So is yours any different than, say, like a Zillow or something like that? Do you have more customized options for mortgage companies? Is that, or how do you sell leads?
Not so much. I mean, we are an agency, and so we set up, so like rather than generating the leads ourselves on our own assets and then playing Harry Houdini behind the scenes to add in our markup and and create these filters so that you're only getting leads between this credit score and this credit score, right? But the 700 plus FICOs, like these are going to this guy because he pays twice as much per lead or whatever. There's none of that. It's like you're getting the raw leads that are coming from the raw campaigns, but we show throughout our demo process where we're showing people what we do for them. We show them how what we do is modeled after what those best companies, those biggest names, where they've been able to build a brand behind them where they can charge, $80 to $100 for a lead.
Right.
Our clients are going to generate leads for $7 to $10 a lead. They might not have as much control over the filtering of that data, but they also, like, for every one of those filters that you implement, like it's a middleman. Like somebody has their hand in the cookie jar, and so no matter how you look at it, removing that middleman is positive, and that's kind of how we look at it.
That's cool. How many years have you been doing it?
2018 is when we started. So what is it? We're in 2023.
Quick math.
Shit! I should have known this. We April 1st was our 5-year anniversary.
Nice.
So
awesome.
Yeah.
And so the internet leads suck, but yours don't suck as bad.
Yeah.
That's a great slogan.
Yeah. Internet leads suck, but like we can help them suck less by a lot.
They're a little less
by
sucky.
a lot.
That's good. So like, does there like, I remember buying leads from Lead Point, is that one of your competitors?
Yeah. When I started, I haven't heard that name in a long time, but Lead Point, that's like, almost like a la carte. Like you could go in and just say like, have
this lead store that I loved, which, cause like I would do all these tricky loans, right? I was always the out of the box loan officer, right? And so I'd go in there and I'd buy and I'd get it like $5. I could get like a jumbo lead that no one called because it was like, and it'd be like 55 LTV. It'd be like a $2 million loan, like maybe the FICO was low or they had a foreclosure or something like that back in the day. And no one would call it because it was like, these people were all looking for these easy DU run, or government loans and stuff like that they knew how to do. And so literally I would go for like $5 and buy like it was an age like 60 days old. And I'd call them and usually they'd be like, oh yeah, I never really heard. They wouldn't remember that they looked for one, but I don't know. Do you guys have the little lead store too or no?
No.
It's more just like live transfer.
Yeah,
kind of thing,
it's all like, so it all feeds into a platform called High Level where we have like automated campaigns that are meant to simulate the effect of a loan officer following up as soon as that lead comes in. So this came from, again, modeling Quicken Loans. Like at the time,
so when someone clicks the lead, there's automatically an email that's sent from the loan officer.
Automatically an email, a text message. We can pre-record a voicemail and drop them a ringless voicemail. Some of our clients will go as far as to have like pre-recorded videos that they send out in their text message or in their email. You can really personalize that automated approach, but also like you simulate basically what Quicken Loans has with their call center where, it's always been this way. Like as soon as, if you bought a shared lead, like you better not, because you're going against Quicken Loans. And as soon as that lead hits, they have somebody on the phone that they're connecting with
already,
instantly. And so this was kind of, at the time it was a perfect storm between text messaging kind of overtaking phone call as a preferred method of contact and Quicken Loans not having adapted to that really yet. I mean, they used texting, but not as an initial primary, like they had this call center that was crushing it. So they had no reason to try anything else.
Yeah.
And so I think we kind of like, we're in the right place at the right time too, in some ways where, being able to take advantage of the popularity of texting and, the statistics 5-6 years ago, 99% of text messages were read, versus the open rate of an email, at the time, barely, 20% or something like that. Right. So being able to have that kind of leverage. And then, like I said, back then it was, I don't know, you ever hear of Agent Legend, the software platform Agent Legend?
No.
So that was the first software platform that I used in my business. And that was where I first heard of ringless voicemails. And that was 5-6 years ago. Nobody was using ringless voicemail, so it wasn't nearly as spammy as it is now. Now, I feel like a lot of people, they get a ringless voicemail and they instantly associate it with spam. And so we kind of filtered that out. But 5-6 years ago, that was a game changer for me to be able to drop a voicemail that made it sound like I just called to reach out about your inquiry on the site that nobody else has access to except for me. And I didn't have to do it. Exactly. It was an absolute game changer.
That's scalable for sure. I mean, so if you're a broker right now and you're sitting there and you're like looking at your pipeline and it's like 2 loans, you don't have a lot, to walk us through how quickly you could get someone a full pipeline, like, and how much it would cost, what would be the timing, what would be the process, like what? Yeah, walk us through that.
Yeah, so because we have our stuff dialed in really well over the last few years, and we've passed a lot of like the savings on our operations and stuff onto our customers. So we charge a one-time setup fee of $1,500 that allows us to do like your A2P registration and compliance and stuff to make sure that your phone, your messages don't get blocked, and get all your landing page set up and the automated follow-up and all that stuff. And then we charge, it's per market and per loan officer. So more loan officers you add, the more it costs, the more markets that you add. We have predefined geographic locations that we call markets that are based on search volume and available leads and stuff like that.
Sure.
And so that cost for one loan officer in one market is $997 a month, $1,000 a month. And then we would recommend that they spend $1,000 a month on ad spend, and that'll generate them somewhere between 100 and 130 leads right now.
A month?
A month.
Okay.
And then that with our coaching, so on top of this, we have in-house customer success managers. Our whole team is inside of our office in Idaho and Meridian, technically. But then we have success managers. We're going to take you through an your onboarding call, your go live call. That's like, hey, we're going to turn these ads on. Like, you're going to get leads within a couple hours. Like, are you ready for that? Right. And here's what you do. Here's your visual pipeline. Like, looks like pipe drive. Like, when the lead does this, you drag it to this category, and just kind of coach them through how to think about this. And then we're meeting with them every 2 weeks for 2 or 3 months, depending on how long it takes for them to get up to speed. But really, once they're in stride, they can expect to spend, and this number is going to vary based on, are you looking for a high volume churn and burn approach, in which case 1% conversion is probably still going to be a scalable cost for you. I mean, you're still looking at $1,500 per closed loan at a 1% conversion rate, right? $1,500, maybe $2,000. Well, we've got a lot of brokers where that'll do just fine, and they're good with that.
Totally.
But then we have retail LOs that make 120 basis points and pay for this out of pocket and don't even get to expense it because they're W-2 employees and don't even get to write the shit off, and it still makes sense for them. But they've definitely got to drill deeper and work it more, and leverage them in their relationships with real estate agents, so they generate a lead, get a pre-approval. 70-80% of the pre-approvals that we generate are not, or of the leads that we generate are not associated with an agent yet. So now they take that.
They can take that and get a realtor.
Exactly.
Yeah, that's so good. We did a podcast with a luxury realtor a little while ago, and I was just going through that whole thing. Like, if I brought you a qualified buyer, next time I call you and he's like, I'm going to take your call.
You bet.
And it's like, yeah, I mean, that's the total opposite approach. Most loan officers are calling, asking for business, asking realtors for, hey, do you have any buyers I could pre-qualify? Hey, and then, the whole thing also where it's like cross-qualifying and all that, which is pain. And like,
that's very unique to the San Diego market, by the way. You guys have been doing cross-quals since I originated loans here freaking 7 years ago. And still in Idaho, we have yet to see people get away with trying to cross-qual clients without the other loan officer just freaking out and threatening to report to this and this. And I'm like, California's been doing this for a long time. Like, if it was illegal, it wouldn't be going on there. But that cross-qual stuff is crazy.
Or like the one thing they hate more than anything is trigger leads. Like, when you pull your credit and then all of a sudden that's so annoying, right? And then, I mean, it's got to work at some level, right? I mean, otherwise it would be so many people doing it. But
I agree on some level, but also I think that like trigger leads worked at a point, and then you had these crazy inflated call center environments due to this last refi boom. And then they get to this point and now they're just trying whatever they can. They're just reaching. And I think that because we like the last 6 months, we have seen trigger leads as a problem more than ever before, like by a mile. Like trigger leads have always been like something that like a scuzzy inside joke with loan officers about who works trigger leads, right? But like consumers didn't know what the hell a trigger lead was. No. And now trigger leads are like proliferant enough that we have like entire movements of brokers that are educating their clients around what a trigger lead is and how to avoid, like that just wasn't a thing before. So I have to imagine that's a function of like overinflated call centers and consumer direct shops that are just reaching, just trying to find exactly
trying to find loans and annoying everyone in the process.
Yeah.
What about like AI and leads? Is there anything in that area that you guys are working on?
So AI, where we see the biggest opportunity with this and where we like want to see our development go over the next 6 months to a year, is more around the initial engagement, initial conversation, and routing, and
or like a chat bot or something.
Yeah, exactly. But in the form of in the form of text message, right? Yeah. So we have clients that generate leads in 25 different markets, and one of those clients takes the exact same approach with every lead that he gets. It's the same path. He has people trained to take them down, and he calls it the path, and it's the same path every single time. Now we've been able to identify 20% of his markets where that isn't effective. We can see the difference in his, app to not only his lead to app rate, but then his app to close rate as well. Like it's just not working in those markets. And so I think that I bring that up because I think that the issue of like having a AI chatbot field your incoming requests, like it can sound simpler than it actually is. But when you really look at the number of different, like the different markets across the country and the different ways that those clients interact with salespeople. I mean, San Diego is a completely different market when it comes to working leads. Like we have a completely different playbook for teaching LOs how to work leads in San Diego than we do anywhere else in the country.
Interesting.
And so that kind of knowledge.
I'm curious what's different about it.
Dude, I don't like San Diego, Southern California. It just feels like everybody's like been bombarded with marketing like 10 years before the marketing trends were marketing trends. It just seems like everything that works in Southern California works for a shorter period of time before the audience is jaded and know how to ignore it and screen it and are more willing to just, is this like, I hate to say it like this, but more willing to treat a salesperson like they're less than a real person,
like dog shit.
Yeah, like more willing to be like, oh, that's just a salesperson.
They hear the call and they just hang up.
100%,
not even like
100%.
Higher, like no, I'm not interested. Just click.
And then we have what we would refer to as like warm markets across the country, like the South. Yeah, like a Tennessee, dude.
How you doing tonight?
And dude, it doesn't matter what you say. Like you'll get some people that are like, oh, I'm sorry, you've got the wrong number, but thanks for reaching out or whatever, right? Or,
I think my sister's looking for a loan.
100%.
Right.
So we have markets like that out there where his approach just absolutely slays it. So I think for us, the move with AI is to bring something to the market that nobody else is going to be able to do because nobody else has those insights like we do on where, like geographically where people are different and how they engage with you, and whether, some markets, they are what we would call like a quick to phone call market, where your number one goal as soon as you get in touch with them, like initial text message from our automations is almost always, were you looking for an idea of what you can qualify for, or were you just looking for some basic requirements and process information or whatever?
Yep.
And so they'll almost always respond to that in some way. And this doesn't matter. It doesn't matter what market we're in. Southern California will respond to it too, but it goes cold after that, right? So some markets, the best play with those is to just go back and forth via text message. Oh, great, I can help you out with that. Where were you looking to buy? And go back and forth via text message, and maybe after 10, 12 text messages, then you go, hey, great, everything looks good so far. When can we hop on a call for a few minutes to confirm the details and see what we can get you qualified for? That's the best approach in some markets. And then in other markets, you start playing that song and dance game with them and they just ignore you. And the best approach with those is that first message, that first response comes in and they say, yeah, I'm looking for a basic idea of what I could afford. And you say, great, I can help you with that. When do you have 5 minutes to hop on a quick call? In some markets,
so that market works.
Exactly.
Wow. Yeah. That's good to know. I mean, so you've been doing this long enough to where you're drilling down on all these different markets and all these different methods that are successful. I think that I've never heard. I mean, I don't go buy leads because I'm not doing loans anymore. But I can imagine that you're not. I mean, are you the only person that's doing this, or is there some others?
I would like to think so. I mean, I'd love for anybody that's watching this that thinks otherwise to like bring it up to my attention because like if anything, like the network is stronger in numbers, right? Like my enemy is Rocket Mortgage. Like I don't give a shit about, another marketing company. If another marketing company wants to come do what we're doing, as far as I'm concerned, they're helping further the cause.
Yeah.
And so,
because Rocket's got such a big market share, right?
Yeah. I mean, and they're just like, I just don't think that,
Rocket's retail as well, right? It's retail.
Yeah. Oh yeah.
And then, is Quicken the wholesale side?
No, so to my understanding,
I should totally know this, but
to my understanding, Quicken is just basically the formerly known as Rocket.
Yeah.
You have Rocket Pro TPO, that's their wholesale side, but then Rocket Mortgage is a retail, a direct to consumer. And really what it boils down to is just like, if you've been doing this as long as I have, parallel with Quicken Loans, like you know that like their goal is to close loans with the least amount of input possible, with the highest amount of leverage possible, with call center reps in the middle of the country that are paid, pennies compared to
least amount as possible.
Exactly, and aren't true professionals. And if you look up, you have to dig deep a little bit because they're so good at burying bad reviews with good like money and good reviews and Trustpilot, where they pay Trustpilot to show up and only show that it's crazy. But if you dig deep enough, you start reading reviews on what Rocket has done with some clients, some direct to consumer clients, it's like, if I was running a mortgage company and I did that, I'd be out of business. I'd have to rebrand tomorrow, and I'd have to go, I'd have to go open up a new shop. But because of the amount of money and sheer force behind that
so
name,
massive,
that they're like, it's horrible for the consumer.
It's almost just a matter of time before they cut out the LO.
100%.
Like I'm talking, they're probably got AI working on trying to figure out how to cut out that LO tomorrow, and then it's just going to get it's just very transactional, obviously, and then the it's just a narrow amount of people they can serve, but it's just going to burn through them all.
Yep, 100%. And like I saw when I was doing this, when I was closing loans, I had enough instances of people that I would talk to that like were afraid to talk to me because they had gotten turned down from either a local bank or a Rocket Mortgage. Right. And I think about the number of people that talk to somebody that's really not qualified to tell them that you can't qualify to buy a house. But why are they saying that? Well, because they're trying to get you to go hit up your sister who's a co-signer and has all this money and stuff. I'm not going to tell you that you might be able to qualify without my overlays or without my lack of experience. I'm going to tell you, no, you can't qualify. And then that's one less borrower that's out there shopping for a home with a pre-approval letter.
True.
So just on so many levels. And to your point, that like they want to get rid of loan officers. It blows my mind to see the number of brokers that jump into the AIM Brokers or Better group to like step up and stand up for Rocket and how amazing their technology and their services and whatnot. It's like, yeah, dude, they're petting the back of your head while they get ready to stab you in the kidney, and it just it blows my mind the number of people that are willing to contribute to that.
I mean, well, I think it's unfortunate, and it is the future. But non-QM is a little different. It's harder. Eventually AI will probably figure out how to do it. But for now, the Fannie Mae stuff, the government stuff is going to just become AI. And it's a bummer for LOs that have been doing it forever. And it's just, but that's the whole fear of AI right now that I think a lot of people are worried about. Is just like so many, white collar jobs are going to be taken from AI.
Yeah. You start
like,
going back to,
we have another run, but is it going to be dominated by AI? Like when the rates drop again, will that be like someone's probably gearing up for that?
Yeah.
But in the meantime, you can build your business, right, with just doing this stuff. And I want to talk about seconds because I've looked for second leads and I couldn't find them.
Yeah.
And maybe I didn't spend enough time, but a lot of places didn't have data on a self-employed borrower wanting to do a second.
Yeah.
And so it was tough for me to get that. And maybe it's come now in that was probably 2 months ago. I was looking into that, 3 months. Now maybe it's gotten better. I don't know. Maybe there's a demand for it, so people are making it. But tell our listeners how you could help them do more of our Aspire seconds.
Yeah. Yeah. I mean, I think like at the end of the day, what we do is we capture and convert search volume. So anywhere where there's search volume, like we can create a landing page that can convert that traffic into a lead. And so like the more, I think what it comes down to is understanding the persona of the person that you're targeting. So understanding those details, like that they're self-employed and that that person is not searching for Aspire second mortgage or second mortgage bank statement loan. They're probably
even searching for a HELOC, but there's no HELOCs for them because they can't qualify at a bank. So, but they're still searching for a HELOC, but you're like, hey, look, you can't get a HELOC, but I can get you this much. How much cash do you need up front? I need, X amount. Well, we'll get you that cash and give you a little buffer, and you can either pay the loan down and it's an interest only, so your payment will drop, or, set it aside and put it in a high interest, bearing account or something, some other investment. And then, but you're right. They're not searching for per se, like, Aspire or, they might say like self-employed, qualify, second mortgage or HELOC or something like that. But there's
no doc HELOC or
no doc HELOC, exactly. But there's historic equity in homes today. I mean, it's like trillions of dollars, and there's it's just a bummer to think that you have to pay off your, people are probably like, dang it, I really need that money, but I don't want to pay off my 2.5%, 3% first. So they're in this conundrum, like maybe, and so they're like, what do I do? Yeah. So that's why we came up with this product, and
it's an amazing product. Like instantly, I'm like, dude, I have $930K balance on a 2.875 rate that I locked in 3 years ago. Like, I'm not touching that. Like, no, not a chance. So, but
you'd always
when
borrow.
Ryan told me about that, I was like, dang, that's a cool product.
You can always borrow at this higher rate, and then you just pay that one down. Yeah. Leave your two forever. For 30 years, right? And then you just borrow, and then you can pay off the second, or if the rates drop, you can consolidate it or whatever, But so you can create a whole lead thing around that. So if someone wants to crush it today in June, or like right now it's more in May, but like let's say they wanted to start crushing it in June, just getting a ton of self-employed borrower leads that want cash out on their house without paying off their first, you can help them turn that on.
Yeah. We don't have we don't offer our core service where we do like the full front to back, like what I expressed, the $1,500 setup, $1,000 management fee. But we're always like, we're a marketing company that does consulting, and we have other channels and ways that we can do that. So it just depends on how much, how bad does somebody want that business. And I think there should be a lot of people out there that want that business, because it's smart business. It's smart money.
I'm telling you, it's going to be on fire. This summer, I mean, people are like, they're maxing out their credit cards, their business. They want to grow their business. There's a lot of people looking for work, so you could hire, you could grow. So it makes so much sense that it would be just on fire.
And the education component of that is like 100%. I feel like the biggest challenge, right? I mean, and CMG had this with their all-in-one loan thing, that like where
the HOA, right? The home ownership accelerator.
Is that what they call it now? Yeah, it was it was AIO when I was
is that where they had a checking account and then it pay it down? And
it's like mortgage. A checking account, a home equity loan, and a 30-year amortized mortgage all in one, where they have like a amortization schedule that lowers your credit line over time, but it means that you can reduce your interest basis on the loan by the amount of your cash deposits every month.
Man, I remember going, that is a lot of things. It was really hard to talk to the borrower and convince them that, because it was so hard to understand. I mean, it should have been pitched more like, I mean, you had to probably have like a calculator in front of them, like,
yeah.
a full, like, just.
They had a training, like you couldn't do, even as a CMG retail LO, you couldn't do an AIO loan without being AIO like certified. It was that kind of product. And that was kind of what I was getting at is like, this is, yeah. I don't know what they call it now, but it's definitely still around. But that was what I was getting at is like their biggest challenge with that product. I mean, it's a cool product for the right person, but education is everything on that. And how do you educate the general public? And then how do you educate your loan officers enough to care enough to learn enough about the product to then go out and sell it?
I know, because there's a lot of LOs that have come into the business in the last several years, right? But they've never needed a second. Yeah. That just never was a thing. I remember, I've been in 1,000 years, that's why I have the gray hair and, stress in my life from being in the mortgage industry. But the seconds is like a whole new thing for most people. Yeah. But I remember doing them. I remember doing them a bunch. I remember even the 125s. Do you remember the 125s? That's when they would do a loan 125% of the value of the house. Like, when was that? Someone thought that was a good idea, and Wall Street bought it up and did a ton of those. And it's just one of those things that, like, we did that. And then you think of like LTV, now it's like, it's we're all afraid to go up to 95, because it's scary going through the crash, but I don't know. So that's cool that you could help turn on some leads like that for our listeners, our brokers.
Yeah.
I'm sure they would. I'm sure you're going to get calls.
I could nerd out. Like I'm like my wheels have been turning like behind the scenes in this conversation around like, Google, so much of Google ad performance is driven by the data that you feed back to Google, meaning like if you can take what they tag each person that clicks on their ad, they tag it with what's called a GCL ID, right? A Google Click Identifier. If you can take that and you can feed it back to Google, and you can set up alternative conversions based on the quality of the lead, then you could, in theory, set up a home equity funnel that is just for home equity, and then have your form questions determine whether or not they're a candidate for Aspire, right?
Yeah, self-employed or not. Yeah.
And then regardless of whether or not if somebody converts for a $50K home equity line that isn't a candidate for the program, and you don't want to target that lead again, you just don't send the conversion data back to Google, and you wait until you get that the one that's a perfect fit for the Aspire program, the self-employed, $400,000 loan amount, 75% LTV. And then you feed that data back to Google, only that data. And then Google picks up like, okay, this is what they're looking for. This is the demographic that they're looking for. This is the time of day that demographic is searching, and they pick up and feed all that data. And you could even go as far as to set up different values where, a home equity lead is worth $10, but that an Aspire lead is worth $200, and send both of them to Google, and then Google will behind the scenes optimize to get you the most value out of your ad spend.
Wow.
And they've gotten really good at that. That's a big part of what we do.
So you don't just do the lead selling, you also can consult and teach people how to do this on their own as 100%. Well. That's cool.
Yeah.
Well, I hope you brokers are gonna freaking call in, because we need more business, right? I mean, there's a whole, the pie went like from this massive pie that everyone was just happy and fat on, and then it's like shrunk to this smaller pie. But like, the pie is out there, you just have to know how to find it, and you have to know how to, what to sell right now. And this is a new product to sell. So how do you deal with agents getting leads first?
So, and this is funny, because we talked about we were talking about how agents traditionally have gotten the leads first, and that's why as loan officers we're wired to go with our hands out and say, hey, can I have a referral, please? However, and this is nuts, I did the research at one point, and this was not as early into Empower as I would have liked it to be. It was like 2 years ago that I looked this up. But I was like, why? Like, why did that happen? How did that happen in the first place? Yeah. So I start digging, and I put together this timeline that was like, this is why. So realtors, like the MLS came out in the late 1800s, right? The MLS, the multiple listing service. That's a long time ago. Late 1800s, and basically all it was
like a newspaper or something.
Yeah, exactly. All literally paper, and it was a group of real estate agents that, like, real estate agents were a new profession at the time, but I've got a list of people that want to buy a house. You've got houses for sale and people that want to buy a house. And you get a group of people like that together in a room, and it makes sense. Hey, let's create a comprehensive list of all this. And then they gated access to it. In order to have access to that MLS, you had to be a member paying dues and, yada, yada, right? Mortgages weren't a thing until like the early 1930s. So agents literally had a 50-year head start where like houses either just didn't cost enough or our financial system wasn't complex enough. I don't know. I didn't dig that deep into it, but I know that mortgages weren't popular, weren't a thing, like weren't an option to buy a house until the 1930s. And so mortgages were literally invented as a way to monetize who the realtor was in that transaction. Like you'd be an idiot if you invent the mortgage and the first place that you go is not to the real estate agent that have all those buyers, right? You'd be an absolute idiot. But then you fast forward and like Redfin was actually the first like map-based MLS tool where you could look, where a consumer could see stuff online. I think it wasn't
Zillow.
It wasn't Zillow. It was Redfin in 2003. Zillow was very, very soon after that. But Redfin was the first one, but now we have Zillow and all these other tools and whatnot, right? But 2003, that represented the first time that a consumer could actually go to a loan officer first in theory, and that it would make any sense for them to do that, right? So we just like, we're battling 80 years of this is how we've always done it.
Sure. Right.
And a lot of people who make a lot of money keeping it exactly that way. Whereas nowadays, from a consumer standpoint, it makes zero sense. It's like going like I don't know. I mean, I sold cars before I got into mortgages, and I talked to some buyers of cars that were really smart and would go to their bank first and get pre-qualified before they went in and whatever, right?
Right.
But that's not typically how it went. And when that happened, you got clubbed over the head by the sales manager with an interest rate that was 2% higher than what you could have qualified for and all that. Like, it's going to shift. Like, consumers are going to recognize that, like, why, like, this doesn't make a whole lot of sense for me to go to this person first so that I can go to like whoever their friend is or whoever, is paying their marketing bill or whoever went to their kid's soccer game this weekend, it just doesn't make any sense. And I have faith that like when things don't make sense like that eventually like homeostasis will be reached. You know what I mean?
Yeah. It tends to balance out. And I've always been a believer in doing it the other way. Like, I just hate like having to kiss ass to like realtors, and just doesn't feel good.
No, it doesn't.
So if you can bring a lead to an agent and you have the goods, like, it just makes it way cooler.
Yeah.
And just makes your life better, I think.
You get to be selective about what agents you want to work with, right?
Then they're going to give you business back. 100%. I mean, it's so reciprocal for sure.
Yeah.
What about how do you convert internet leads? Like, because we were talking about how they suck, but you've done it so long that, you probably know, you've seen what doesn't work and what works. What's like some secrets that really work? I know you kind of went through it a little bit, but maybe is there another little nugget you could share?
Yeah. So a couple things. Number one, like automating that initial contact, unless it's a live transfer, like that you can't not do that and expect to be effective with this.
Is that pretty cheap to get a software that does that?
Oh yeah.
Or do you just turnkey it over?
Yeah. So we include the software. So we sell the software as a standalone software for $197 a month to be able to, like, so if you have your own leads that you want to drop into that, like we sell the software for $197 a month for that. And then we include that software as a part of our fully managed service, basically. So
cool.
Yeah, it's fairly cheap. So automating initial contact, that's a non-negotiable. Having like a Kanban style pipeline where you can visually see different stages and the bottlenecks that might exist in your process. So, if you have this Kanban style pipeline that shows responded and then, phone call or appointment scheduled, appointment shown, and then application received, and then you all of a sudden have this huge stack under appointment scheduled that never make it to appointment shown. Now you have a really easy like visual of like, okay, I need to improve my process here. I need to make sure that I improve the step between scheduling that appointment and the appointment being shown. So that visual pipeline is crucial and one, like a non-negotiable as well, in my opinion. Then the next thing that I'll say is understand where the commitments in a mortgage process are, and understand like I call it the you want to be the financial dentist. Okay, so if I go to a dentist,
people don't like dentists.
Nobody likes dentists, right? Nobody likes a dentist. If I go to a dentist and that dentist tells me, it's my first time I've ever been to a dentist, and that dentist tells me, man, you have perfect teeth, no cavities, everything looks great. I hope to see you in 6 months.
Yeah.
Odds are I'm probably never going to go to that dentist again.
Right.
Odds are I'm probably going to wait for the next mailer I get that says, hey, get a free cleaning and x-rays and blah, blah, blah. And I'll go see that one because there's no pain involved in it. There's not, like, it's not a negative experience, right? On the flip side of that, if I go to that dentist and that dentist says, oh man, it's a good thing you came. You know, you got two almost cavities. They're not cavities yet. It's a good thing you came. We caught them early.
Caught them, yeah.
Whatever. Have you been flossing? They start doing that number, and then they ask you to come back in 6 months. Odds are, if you go back to a dentist, you're going back to that dentist because you don't want somebody else to tell you how screwed up your mouth is, right?
You don't want to go through that same process again.
Exactly. Yeah. And then there's another piece of this is like just giving away too much information without asking for a commitment in return. So if they, borrowers go online not to talk to a loan officer, they go online to get information, to get questions answered.
Right.
And so if you give them the feeling that all of those questions can be answered without collecting a full 1003, and then you give them all those answers without collecting a full 1003,
right,
and then you ask, all right, so do you want to see for real? The answer is going to be no 99% of the time.
Sure.
You have to control access to the information throughout the process. And I'm not saying...
You got to be first to it. You got to get them to spend and commit time and go through a full 1003, because if you don't, then it's gonna be easy for them to do it with someone else, and they don't want to do it a second time.
Exactly.
So I'm sure there are some lead companies that would have someone fill out a full 1003, right, and then just pass it on, and then they pass it on to multiple people. I've heard of that, but
yeah, I don't know. I think that might, like, I think that was probably more common previously. Yeah. I mean, nowadays it's like I probably don't want the lead that's willing to just go click on a 1003 and fill it out. Like,
I think it was probably back before the 08 crash. I remember there'd be call centers and they would take loan apps and then they would sell them to like multiple people or something like that. I don't know if you could do that because of the social securities, but yeah. But yeah, I think you're right. I mean, we used to call it take them off the street. Like, and what that meant is, back before I was in the business, in the late 90s. So we would go and we'd do these things called lookups, and we'd drive our car, it was a company car, to their house, gather all their docs so they couldn't send them anywhere else or give them to anyone else. And we'll make copies back at the office, and we'll bring these back to you as soon as your loan funds, or we'll mail them back to you. And they'd always be like, okay, no problem. And then you go and you do get their loan, and then you do a full 1003 on their kitchen table by hand. And that was kind of like taking them off the street. So the same kind of idea, right? They wouldn't want to do that with anyone else. And then they'd have to call you and ask for their documents back. And it just would be this big. So that's kind of the equivalent of that, the modern day, take them off the street. Yeah. You can't, we don't charge application fees, right? We can't and I'm sure some people do. I know it's not like illegal technically, but nobody's charging up front to get a good faith deposit right there. So the best thing that you can do is get the credit pull, right? Because that is the thing that you can warn them, hey, you don't want to go out and do this a whole bunch of times, right? Yep. You got to get that credit pull. That's the second. The appraisal, exactly, and Quicken's good at that. They they do collect that good faith deposit. They do it as early as possible, and they spend it as early as possible. Order the appraisal as early as possible so that they don't have to refund that. And it goes through their AMC that they own, and they make money on that too. And that's a whole other story. Down, man. Yeah, crazy. I think. I don't know if. Anyway, I'm not gonna say anything either way, but I've heard probably some things also, and I don't know if it's true, but if they are a retail and a wholesale, I would be worried as a broker sending it there that they're gonna take your client. Yeah. Right. Like especially if you do a higher rate right now, as soon as the rates drop, I mean, I don't know if they have a policy on that or not, but that would be my biggest concern, is that all of a sudden when rates drop, that client's gone. And we hear that they do have policies in place. We hear that they do make promises to brokers that, hey, this isn't going to happen. But at the end of the day, the borrower is still seeing Rocket Mortgages every month that Rocket Mortgage's name every time. And Rocket Mortgage is still spending more money than any company in the country on consumer direct advertising. Right. And so
you're losing mind share. I don't know that their agreement, I don't know the ins and outs of their agreement. I don't know that their agreement goes far enough that like if your borrower reaches out to their consumer direct channel, that they're going to redirect them. I'm 99% sure that is not the case. I mean,
if they were smart,
and that's the problem.
Yeah, if they were smart, well, they don't have to do it because they're so big. But if they were smart, they would maybe promise, future revenue share on refis and stuff.
Yeah,
like that would be
really smart.
Then you're in LO and you're just kicking.
It'd
back.
Be easy to pull the plug on too whenever they want it. At the end, like rather than making a promise that they'll feed it back to the broker, that's a huge infrastructure change that they'd have to make versus revenue share, optional revenue share. That's contingent on.
They don't
them.
need to do it though, because people are just like they got really low rates and they're playing this long game probably where they know they're gonna capture that client for life. So.
Yeah. Well, and they developed the technology to make it so easy for their call center reps to close loans. It didn't take much for them to tweak that and make it easy like a TPO portal, an easy TPO portal. Right. It didn't take much for them to just tweak it a little bit to make that same dummy-proof software they made for their call center reps for brokers.
Yeah, like I know UWM has a really easy process, right? So it makes it so easy for you to want to use UWM. But cool. So what's some challenges you guys have right now?
Challenges we have, or challenges our loan officers are seeing?
I mean, I'd say either one. I mean, you guys as a business probably have some challenges. I mean, probably trying to find LOs that are willing to work right now because they're probably looking at the rates going, I don't know anyone that would take these rates, right? So they're probably, I've come across brokers that are just kind of just the wins out of their sales. So that's got to be a challenge. We're like, what business challenge are you trying to scale your business?
Yeah, 100%. I was talking to my brother-in-law last night about this. It was like the amount of work that we've put in over the last 6 months to grow and scale in this market. Like if we would have been putting in this amount of work when things were good, oh my gosh, the amount of money we would have been making, amount of money that we would have been making. The challenges, I mean, it all comes down to the market, right? It all, like, what we find is that I think we have an easier time acquiring new clients. We have more people that are willing to try anything in this market. We have a much harder time getting people to hold out the first, hang on the first couple months to like really, because you asked the question earlier, and I don't think I ever answered it directly. We tell our loan officers, don't expect to make your money back from your initial investment or your initial couple months of investing until month 4. Mm-hmm. Right. So that means 3 months of, you $2,500 up front for our clients and then $2,000 a month. I mean, you're $7,000-8,000. Like there's a lot of loan officers that just don't have that in them. And they'll listen to us tell them and set those expectations, and it'll go one ear and out the other because they see dollar signs. And then by the second, third month, they can't even afford to pay us, let alone make the choice.
Right.
And so I think we've seen a lot of that where, retention during the low rates and craziness of COVID,
right?
Retention was cake. Like $1,000 a month, loan officers weren't even paying attention to the bill, right?
It's just a rounding error.
But acquiring customers was tough because it wasn't hard to get business.
People were busy.
So we've seen that flip flop, and that's created definitely some challenges, some adjusting, but it just makes us better. I mean, that's all, we just got to get better. We got to help our clients get more value out of what we're doing, and the compensation will follow.
So what's forcing functions with technology, and how can that help with call reluctance?
Yeah. A forcing function. I'm trying to remember where I heard it for the first time, and then I heard it again a couple days ago, and was so pumped that I heard it and then forgot to take note of where I heard it. But basically, a forcing function is a decision that you make that locks you into another decision that helps you in the future.
Is it like chess a little bit?
Yeah. I mean, I suppose like a chess mindset. Yeah, you could.
Where this move is going to make them do this other move, or like.
Well, but it's for yourself. It's for yourself. So it's like, so in the context of what we talk about, we use it for helping loan officers overcome call reluctance with agents. Like if we drop 20 agents from your database into an automation that sends them a text and says, hey, this is so-and-so from, this, or hey, it's Mike. It's been a while since we talked. I wanted to talk to you about some things that we've got going on and see what you've got going on in your business. And you just drop 20 of them into a text like that. You're going to get over half of them that respond and say, and I'm not talking cold, right? I'm talking from your database.
Sure.
it's a forcing function because it forces you to make the calls that you should have been making anyways. But it's so much easier to drop 20 of them into an automation that sends a text message than it is to actually pick up the phone and make the call 20 times. Gotcha. So you're forcing yourself, because once they respond back and say, yeah, I have 5 minutes right now, or I have 5 minutes at this time, what are you going to do? You're going to ignore that? No, you're going to get on the freaking phone and you're going to, and you're going to make that call. So that's that to me, forcing functions. I wish I remembered where I heard it from originally, but that's how we end up using it. Is we end up getting loan officers that suffer from the just standard call reluctance of like, hey, I know I should be making these 20 calls every day, and I sit down to do it, and then I have this thing that turns into this thing that turns into this thing, and I just don't.
It's the last thing on your to-do list, and you're like, everything else is more important. Yeah.
So the automations can really help force your hand that way by like making an introductory step at opening the door and allowing the other person to step through it and forcing you to like, all right, cool. Well, I got somebody on the hook. Let's go.
That's cool. That's really good. And that's something you offer with your service?
Yeah. That's something. It's like, I mean, it's hard to say like we offer that as part of our service. It's like coaching that we provide around like, hey, yeah, you're struggling to make these calls, dude. Drop them into an automation every day. Run this automation once a day that all the leads in this pipeline get this text message, and they're going to text you back, and you better be ready when they text you back.
Man, I think this is something that all broker shops need to do. So, I mean, this is going to be valuable stuff. What other missed opportunities do you think there are right now in the mortgage industry?
I think
clearly the seconds are a missed opportunity.
Seconds are huge.
And you can make money on them.
I'm going to piggyback what I was going to say with the seconds, because these go hand in hand with each other, is leveraged agent education opportunities. Leveraged opportunities.
Talking about real estate agent or like
real estate agents.
Okay.
Like creating leverage by running classes on the most basic of stuff, and then having a marketing automation system that allows you to like capture, once you capture their information, you send them follow-up emails, but basically, building that database up. But I'm not sure if you know Jeff Zimfer. He runs the Mortgage Marketing Institute podcast, or Mortgage Marketing Radio.
I should know him.
He's a good dude. You should know him. He's out of Vegas.
Let's connect.
I can help connect you guys too. He's a buddy of mine. And he runs these classes. He basically has a coaching program around running marketing classes, or even sometimes product knowledge classes. So this is where the seconds come in, is like education in the market is a huge component of this. If you can educate,
do you do like in person? You like rent a room, like a ballroom or something, or
either or? Do it Zoom. I mean, in today's world, do it Zoom. You're a lender. Right. You don't need to be limited to this geographical area, right? Like, do it Zoom. I don't think it matters. Most of his clients are doing it in person. He has got a lot of clients that are transitioning from more traditional models for their business. But yeah, I think the second mortgage is a huge opportunity for one of those educational modules, is like just this program and what it can do and why it's valuable. If you could run a class where 50 agents show up to that, I mean, like the leverage created there is just insane. And we now, because of COVID and all the like remote work and electronics, electronic technology interactions that people were forced to like kind of get over, there's this huge opportunity I feel like that exists for it to really create a ton of leverage where you're one loan officer talking to 50 agents at one time.
That's huge.
Through educational content.
That's huge. So what do you know about non-QM? Do you like it?
Yeah, I do. I love it. I bought my place on a bank statement loan and then waited 8 months for me to finish 2 years of self-employed tax returns and refied into my 2.8 from UWM.
Nice.
So yeah, I had a bank statement loan and I had it with Remen, and it was a horrible experience. No offense.
Are they still in business?
I don't think so. And, if they are, it's like not like one of those things where it's like they didn't close their doors, but they stopped originating all loans, whatever that means.
Yeah, I think they stopped either non-QM2 or I don't know. It was a bad experience. I'd throw that out there because regardless, it served the need. Yeah, it served the need, and it was the bank statement program. I mean, it just made like loans. Common sense is not an underwriting threshold anymore. Like you can no longer make loans that make common sense. They either have to fit in the box or they don't fit in the box. But there's so much
common sense business out there to be had.
Especially with all the gig economy and with all the people doing different things, selling Bitcoins or whatever, NFTs, all these things that they're doing, right? So it's you can't catch up to that fast enough with the mortgage, boxes that people are in.
Exactly.
Are you seeing an increase at all, or what are the trends like with your business? People that are signing up with you, are they doing more non-QM these days?
Yeah. I think it's tough to say because the market has changed really quickly back and forth over the last couple years, and so I would say 6-8 months ago, I heard it way more than I've ever heard it before. People thinking that was that's going to be the solution for the market problems for whatever. Right. And I'm not going to argue for or against the reasoning with that. I'm not even going to pretend to be able to understand it. But as far as I think you just have people looking for different options, for alternative options. Right. The other thing that non-QM has going for it, in my opinion, is how much the public has been warmed up to adjustable rate mortgages again over the last year, 2 years in this rate environment, right? Like a lot of your non-QM business is not going to be a 30-year amortized loan. And I feel like previously when I would sell non-QM, that was a big hang up sometimes, was the 5-1 term or 7-1 term or whatever. Right. And that was a hang up. We don't see nearly as many balloon type situations as we used to, but
yeah, I mean, non-QM has a 30 doing 40 doing 30. That's a pretty big product.
Oh, that's cool.
And it's amortized over 40, or it's 10 years of IO, and then actually you wouldn't need it that way. But yeah, amortized over 40 and doing 30. So yeah. I mean, it's interesting. I think there's other countries that do products where it's based on their age. So you can get a 50-year mortgage, I think, in other countries, or cool. Some countries I think it's 25 years. But I mean, products are there's some new products that you might not know about. I mean, like the balloon thing is something that you don't see short balloons, 5-year balloons as much. But 40 doing 30, and there's a lot of 10-1 IO, 30-year fixed loans. They're fixed. The first 10 years are fixed. So I mean, I think
that was mine. Was a 10-year IO that was amortized over 30, but ballooned in 15 or 20 or something like that.
Yeah. So it's. I think they're a lot more safe these days, these loans, because they're not. I don't know.
The underwriting requirements for a non-QM loan are stricter than for a qualified mortgage in a lot of ways, in my opinion.
People don't like bank statement loans, and you're like, why? I mean, you're looking at everything they spend. You can see that they go, and spend here and here and here and here, and this is what they do, and this is how much money they have left over at the end of the month. You're looking at this for a year versus Fannie Mae. They just look at the W-2, which could be a job lost tomorrow, a pay stub, and then they have 2 months of a bank statement, or one maybe, depending on the what the DU says, but.
Well, and then you have gross income versus net income calculations, and how much DTI is even DTI itself is a lot of the times is a weird way to qualify somebody when you consider the disparity in expendable income for somebody that makes $30,000 a month versus somebody that makes $5,000 a month. Why would the DTI cap be the same on that? Just because I make $30,000 a month doesn't mean that I'm going to spend the extra $15,000 a month that I get, right? I think there's a lot of truth behind just a failure, an overcorrection almost after the recession into too strict of underwriting. And like I said, from a non-QM standpoint, the financial creativity of some of the products I feel was almost a hindrance for a while everybody was in a mindset of 30-year fixed is the only way to go.
Right.
Whereas now, you have everybody screaming 2-1 buy downs from the rooftops, and so people are having to educate themselves on what does that even mean? And an adjustable rate, what? This I feel that is going to go a long way for helping non-QM.
That's cool. So I always ask my guests, any shout outs of someone that's helped you along the way to get to where you are?
Any shout outs? I already gave Jeff a shout out. I'll give Jeff another shout out here. I think Jeff and I have worked together in different capacities for 4 or 5 years, and we're exploring a deeper partnership right now. that would like be, a little bit like combining forces in some ways. And so, yeah, Jeff's on my mind a lot right now. So I'll just give Jeff Zimfer from Mortgage Marketing Radio, not to promote another podcast on your podcast, but
hey, we share.
You guys will be friends.
Like,
yeah.
If someone likes podcasts, they're going to they should have more than one.
100%. Right? So yeah, I'll give Jeff a shout out. Appreciate it.
Yeah, man. Well, thanks for coming on. And if someone, how does someone find you if they want to add, your services?
Yeah. Check us out, empowerlo.com. So, if you're looking for like consulting type stuff, we have a contact us form at the bottom of every page that you can reach out to. If you're wanting to learn more about like the fully managed lead generation service, it says leads in big letters at the top. You click on that, it'll take you to where you can fill out the form there. Cool. We got our phone numbers on the page, Facebook, at Empower LO, you can find us.
Sweet. Awesome. And well, thanks for coming on the show.
Yeah.
And everyone else, thank you for listening. And if you've made it this far, thank you, because this was a long one, but it was a good one. Please comment. Please tell your friends about this podcast, because that's how we grow. And we're trying to bring you guys all the good information on how to grow your business. So thanks for listening. See you on the next one.
Thanks for having me.
The $1 Million Mortgage Experience Podcast.